Oh, all right. It's the Federation of Global Merchants, and I think I'll read to you guys an article that might be very beneficial to you guys that are starting your own businesses. This article is from entrepreneur.com, and it says, should you take out a personal loan for your business? There's no definite answer here, but some things you must think about. All right, and this is from Jared Hetch, and he's a guest writer. He's a co-founder and CEO of Fundra, and Fundra is, I guess, I'm guessing it's a peer-to-peer funding site. So let's go and check it out here. No, actually, it's just a website with where you can get loans and stuff. I thought it was one of those peer-to-peer lending sites, but I guess not. All right. So, should you take out a personal loan for your business? Well, in my opinion, if it's like really small, then yeah, it'd probably be a good idea. But other than that, personally, I wouldn't. But let's see what the article says. It says finding small business financing can be tricky, counterintuitive process. It's almost always easier to qualify for a business loan when you have solid history of success in business. But what about when you need financing in order to get your business off the ground? When a business loan is difficult to obtain, it's natural to consider taking out a personal loan and using those funds as capital for your business. And while you can do this, the question is, should you do this? Okay, and then it says how personal loans for business works. In most cases, a small business owner should consider traditional or alternative business financing when they need capital to grow their business. But there are many reasons business financing might not work out. And in those cases, some business owners take a personal loan against their own finances to fund their business needs. Since personal loans are indeed personal, how you use the capital you receive from the loan is pretty much up to you. Business lenders want to see a solid plan and knowledge of the industry you're in before applying for your financing. But personal lenders simply need to feel secure that you're able to pay the financing back. And that's one of the keys here about personal, loans. Um, Usually, when you go out and get a business loan, you probably get a lot more with a business loan, but you need to actually write out a plan and demonstrate you and actually show you have knowledge in the industry. You know, and when you're starting out, that can go against you because you're starting out smaller. If you're starting out smaller, then you might not have the credibility to get a business loan. So that's something to think about. Ability to qualify for a personal loan will depend heavily on your personal finances and credit history. Good credit score can prove that you have a solid history of making your credit payments on time and paying back debts that you owe. The downside here is that if you don't have a good credit score, you may be out of luck when it comes to using a personal loan to finance your business. Who qualifies for a personal loan for business? As stated earlier, having a good credit score is one of the biggest factors when it comes to being approved for a business personal loan for business. In fact, no information about your business will come into play during your personal loan application process. And that's true, yeah. I mean, when you're doing a personal loan, you don't necessarily have to tell them anything about your business. So the article goes on to say, if your personal credit score is above 580, your personal loan for your business could be a viable option. But the higher your credit score, the better chances are you qualifying. When it comes to personal loan application, the process is pretty simple. In addition to checking your credit, potential lenders will you see things like your tax return, personal identification, bank statements, pay stubs, and things like that. When a personal loan for business makes sense. Okay, when a personal loan for business makes sense. Okay, the bottom line is uh, that when looking for business financing, the majority of small business owners should first consider business financing. That is, after all, what it's made for, to increase capital for your business. But there are a few scenarios where you may want to consider a personal loan for your business. Um, first scenario is how long have you been in business? If you don't have established business history, a personal loan can mean the difference between getting some financing or none at all. Since personal loans can be used for essentially for any purpose, using your personal loan to finance your business would function similar to investing in your business with your own capital. If you only need a small amount of capital, a personal loan may only work for you. Banks are hesitant to give out business loans in small amounts, and although alternative business lenders sometimes offer smaller loans, they usually come with higher interest rates. Personal loan can be a good way to get a little extra money with more manageable interest rates and payment plans. One of the most common reasons banks deny business loans is insufficient capital or collateral. Though alternative lenders or SBA generally, Small Business Administration loans generally won't deny you solely based on the lack of capital or lack of collateral. A small personal loan is unlikely to require capital. However, a larger one might. Okay, when to use business financing? When you have been in business for a while, a profitable and are profitable, and you have a specific need for your business, it likely makes sense to pursue business financing first. For example, let's say you are about to establish a business with a great track record and find yourself in a need of extra capital for a certain business need. Whether you need inventory financing or a way to cover your invoices, a personal business loan may be the better route than a personal loan. You won't find a personal loan that covers a business related need so specifically. All right. Also, if you need some substantial amount of money, generally more than $5,000, $50,000, a personal loan might not cover your business needs, and business financing might not be better. Maybe a better way to reach your financial goals. Finally, if you think that you may need to qualify for an SBA loan, you might have the patience and diligence to follow through with the lengthy application process. It's definitely a good idea to pursue this before a personal loan because they're low cost, carry generous repayment terms, and are backed by the U.S. government. These loans are incredibly desirable and worth the effort if you qualify. When it comes to business financing, the lender will consider your time in business and future potential, your credit history, and your company's financials. If you qualify for business financing, it's often the better route to fund your business. If you're just getting started, a personal loan can be a very valuable tool for covering your business's needs. And that's the end of the article. And uh, there's no what do you call it? There's no comments or anything like that. So, all right. So, question is, should you take out your personal loan for your business? In my opinion, I think it depends on what it is. Maybe not to get started with a large amount, at least for me. I know I have used personal loans to buy inventory to sell online, on eBay and stuff like that. And, I never had any problems with it. So, um, yeah, thumbs up this video, thumbs down this video. Be sure to join our channel, and we'll talk about more topics like this throughout the week. And leave a comment. Tell me what you think. Should you take out a personal loan for your business? So that's pretty much it. See you guys tomorrow.